Hello and welcome. If you're doing business in the UAE, there's a huge shift happening in the financial landscape that you absolutely need to be on top of. Today, we're going to break down one of the most critical pieces of the UAE's new corporate tax system, transfer pricing. Let's jump right in and see what it means for your business. So let me ask you something right off the bat. Does your company ever buy from, sell to, or even just share resources with a parent company, a subsidiary, another business that's part of the same group? Even for something that seems simple, like sharing an office or some back office support? If you answered yes, then trust me, you're in the right place. Here's the game plan for today. We're going to start with why these rules are even a thing now. Then, we'll figure out if this is something you personally need to worry about. After that, we'll get into the nitty-gritty of the paper trail you need, how to figure out what a fair price actually is, and finally, we'll look at the pretty serious costs of getting this wrong. Let's do it. All right, first things first. Why is everybody suddenly talking about transfer pricing in the UAE? What's the big deal? Well, let's set the stage. You see, this isn't just some new rule that popped up out of nowhere. It's actually a huge strategic move by the UAE to sync up its financial system with the rest of the world, with global best practices set by groups like the OECD. Think of it like this. The UAE is updating its entire financial operating system to be compatible with the global economy. And transfer pricing, that's a massive feature in this new update. So what in the world is it? Well, at its heart, transfer pricing is really just the rulebook for setting prices on deals that happen inside a family of companies. We're talking about everything from one branch selling goods to another, to a parent company licensing its brand name to a subsidiary, or even just providing IT support or a loan. And that brings us to the absolute core concept of all this, the arm's length principle. It's a simple idea, really. Imagine you have a spare office printer. If you sell it to your brother, you'd probably give him a nice discount, right? But if you sold it to a complete stranger, you'd try to get the best market price. Well, tax authorities are saying you have to treat your related companies like that stranger. You must price that internal deal as if you were two independent parties haggling it out in the open market. That's the arm's length standard. Okay, now for the million-dollar question that's probably on your mind. Do I really have to deal with all this? Let's break down exactly who gets pulled into this. Now, this is where it gets really, really interesting, because the net is cast pretty wide. Of course, the big multinational enterprise groups, or M&Es, are covered. No surprise there. But it also applies to any UAE business making deals with what are called related parties. Think another company owned by the same person or family. It even covers transactions with connected persons, like a powerful manager or a big shareholder. So here's the kicker. This isn't just a headache for the giant corporations. Even smaller and medium-sized businesses can easily fall under these rules. So if you've determined these rules apply to you, the next logical question is, okay, so what am I supposed to do about it? And that brings us to the all-important paperwork. The UAE has set up a pretty logical tiered system. First up, the disclosure form. Basically, if you have any transactions with related parties, you have to file this form with your tax return. It's mandatory for everyone. Then, things get a bit more intense for the bigger players. There's a master file for multinational groups with global revenues over 3.15 billion dirhams. That's a bird's eye view of the whole operation. And then there's a local file for UAE companies with revenues over 200 million dirhams, and this one dives deep into the details of your local intercompany deals. Okay, but please, if you remember one thing, let it be this. Even if you're well below those big revenue numbers for the master and local files, you are not off the hook. The Federal Tax Authority, the FTA, can still come knocking and ask you to prove that your pricing is fair. So the takeaway here is simple. Being ready to defend your numbers is non-negotiable, no matter your size. So how on earth do you prove your pricing is fair? I mean, it sounds a bit subjective, right? Well, thankfully, you don't have to guess. There's an official toolkit with 5 specific methods that are accepted. The UAE has basically adopted the 5 gold standard methods recognized internationally. You can think of them in 2 groups. The first 3 are what we call traditional methods. They look at direct comparisons of prices or profit margins from similar deals in the open market. The other 2 are profit-based methods, and they're usually for more complex situations where you analyze if the profit made from a deal is commercially reasonable. Now, you don't need to be an expert in all 5, but you do have to pick the one that makes the most sense for your transaction and be ready to explain why you chose it. We've covered the what, the why, and the how, but now let's talk about the real so what. I mean, what actually happens if you ignore all this or you just get it wrong?
It's a fair question, right? Let's say the FTA takes a look at your books and decides that a deal you made with your parent company wasn't priced fairly. What are the actual real world consequences for your business?
Well, the consequences are pretty serious. We're talking about some hefty financial penalties, for starters. On top of that, the FTA can literally just recalculate your taxable income to what they think it should be, which means a bigger tax bill for you. They could also say that some of your expenses are no longer deductible. And because these are global standards, getting it wrong in the UAE can create a domino effect, triggering tax audits and issues for your related companies in other countries. So this is way more than a compliance exercise. It's about protecting your bottom line. So after going through all of this, the entire complex world of transfer pricing really boils down to two simple words: be prepared. It doesn't matter if you're a massive conglomerate or a small family business. The expectation is the same. You have to be ready to defend your pricing. And that really leaves us with one final question for you to take away. Just take a second and honestly ask yourself, is your business ready? Can you, right now, demonstrate that your internal transactions are fair, that they're transparent, and most importantly, that they are defensible? Because in this new UAE business landscape, being prepared isn't just a good idea, it's your best strategy. Thanks for joining me.